Smart money versus dumb money. What are they doing right now, and why do we as investors and traders need to be paying attention? In today's video, we take a look at what exactly is going on as yields spike out of control. Have we seen something on the US 30-year that has us thinking maybe intervention is coming? More importantly than that though, with the gap fill now in the S&P 500, did we just see large dark pool transactions make a big move? In today's video, we'll take a look at all of that together, along with the US dollar wrecking ball, how much worse can it get, and of course, what exactly is going on with cryptos. Millions have been liquidated. The question was that a buy the dip moment? Strong rejections, as we suspected, right off the lows. Guys, a lot to talk about. Let's get into it right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. Stocks, commodities, and cryptos. What are the dark pool transactions showing us? Where are the options flows? And more importantly, where are the key levels? Did Wall Street just initiate an order to buy everything in the market? Well, to answer that, let's firstly look at what the trend has been over recent months. Now, you may be aware that, of course, we used to track smart money versus dumb money. And, of course, flow index is very, very important to consider. What has been happening recently? Well, pretty much since November, since the election, the market has not been that bullish in terms of the smart money flows. As you can see here, making a new low over the last week and forcing, of course, these markets down to around that 57.50 zone. Now, what has that done? Well, it's firstly done a gap fill. That means that every gain that's been had since the US election is now gone. And it also allows now a decision to be made. Is this something much worse, or are Wall Street still bullish for the beginning of 2025? Well, to answer that question, let's take a look at the bad evidence towards the markets right now, the bearish overtones. And it has to do with yields. US 10-year, US 30-year, 20-year, all breaking out to new highs, and obviously having a lot of people really worried. If you went back and tracked all of these previous breaks over the last kind of year and a bit, you would find that generally when we see breakouts past these previous highs, we tend to see markets that are in reversals. That is, that they could even get worse. And at the time of this recording, we've seen nearly 6% at the low being wiped off some of these markets. So then, is it time for maybe the Federal Reserve to intervene? Well, something interesting just happened on US 30-year yields, and this has not that many people talking, but obviously we need to discuss it here. Could we see a huge shift in all of these flows and storylines going on right here at around this point? Well, it comes back to seeing an overbought signal when it comes to markets on the yields themselves. Generally, when we've got to these overbought levels and we've seen a TD13, we start to lead into the idea that we've reached a temporary peak. Now, could it happen tomorrow, the next day, or the next day after that? Of course, it could be any point in time. But we've got to remember, we not only have CPI, which is the inflation numbers coming on Wednesday, but we also have the kickoff of earnings season. That's right, we're back in the thick of it again, starting with the biggest banks. So what is Wall Street doing? Are they planning to potentially do an intervention and therefore say, you know what, things are turning around? Well, it all comes back to also when everybody is stacked into a position. And what we can tell you based on the latest data is everybody's bullish the US dollar. Probably no surprises if you've been looking at the charts over the last few months. But yeah, dollar bulls just hit the highest level since 2019. And when you get to these zones, it's fine to be potentially a contrarian. Yes, if you have like a 3 to 6 month window, these are the points where you've got to say, is that overbought? What do you guys think in the comments down below? Do you think this is the end of the US dollar's bull run for now? Are we about to see a huge inflection point and therefore the dollar start actually falling down? And have yield expectations gone too far? Now it seems like Wall Street and other people are starting to call, at least in the news, remember what they do and what they say is a different thing. They're saying that we're going to see rate hikes now as some of the next moves. And this has now become the prevailing storyline. As we already say on this channel, if it's in the press, it's in the price. So should we really be paying attention to that particular narrative? Well, let's take a look here at some of the latest news from Bloomberg, terminals, and of course from Bank of America themselves. So first up, equities may melt into CPI next week. Now, this is something that we shared and we talked about in our Monday macro show, which is a private show we do. Links in the description down below if you want to join our private community, where we discuss the idea that we still think there could be systematic buying, which may resume ahead of Wednesday's CPI. Remember, this is a scary piece of information like the non-farm payrolls was. And traditionally, we have seen often markets kind of react in an interesting way ahead of news. Sometimes they'll act like everything's all good, then there'll be a massive sell-off, kind of like buy the rumor, sell the fact. In this case, is it a sell the rumor, buy the fact kind of situation? Well, some people are starting to bank on that particular narrative. And when we look at the dark pools, you'll see why, as there were quite a few interesting transactions over the last 24 hours. To kick earnings season off, we have a very surprising kind of release here. Not only do we start off with the banks on Wednesday, CPI day, with Citi, BlackRock, Wells Fargo, Goldman Sachs, etc., and JP Morgan, of course, but the next day, we have one of the biggest semiconductors in the world, TSMC. This is going to be a big deal because, of course, it really means that we start to see already the most important sector in the markets giving their news out. And this really brings down to Nvidia. Have we seen TSMC do well? And if they are doing well, what does it mean for arguably the most important stock in the world right now? Well, according to Bank of America, they're really going in on Nvidia. They've actually put out a call here that they believe the price objective for Nvidia is now at 190 US dollars. Yeah, you heard it right. At the time of this recording, we're in the 135s, and they are now pricing in 190. That's a big differential spread. And this is what they're expecting by October of 2025. Now, if that's true, it could really explain why we've seen the last month semiconductors holding up relatively well. Wall Street seems to be kind of going bullish on this, and they're pricing in some extreme growth. Now, it is important that this extreme growth comes through because if the percentage of S&P 500 companies end up having positive 12-month percentage changes in forward earnings, and we tip over a very important factor, which we may be very soon, that is the 80% factor here. Traditionally, other than one other time, which has been, of course, just before the dot-com bubble, we've actually seen this be a buy opportunity in markets. Now, as we know, guys, it's all about bringing together the bull and the bear cases, and there is always a good case for both sides. So the question is, which one are we on? Are we on the bull side or are we on the bear side? As we've already demonstrated many times on this channel, we still think that we're around that last third of a move through an overall bull cycle. So we have to really still bank on that unless we're seeing enough overwhelming evidence towards the downside. What is the bad side? Inflation, of course. US dollar wrecking ball, not good. Smart money obviously dumping out of the markets for now, but they can come in just like that. And as we've seen, dark pools have been starting to appear on some of these dips in recent times. So if we get another read like this, plus we get some other good January stats, could it be that 2025 is not going to be as bad as some people say? Well, the jury's kind of out on that one. And of course, we'll update you as we see. We still think that this year is the year of the trader and the year of someone being nimble and, more importantly, less leverage. This is not the year to be absolutely going bonkers like you did in 2023 and 24. It's the year to be a little bit more kind of on the risk and management side. If you guys don't agree with that, let us know why in the comments. But realistically, you've already seen some of the aftermath of the election and what the markets can do when every retail trader starts to buy 3 times leveraged funds. Let's go over to the Mag 7. Of course, for us to actually see a market going up, it probably has to be led by semiconductors and the Magnificent 7 style stocks. Take a look here at the expectations this year. Yeah, they've got a high multiple on them, but the expectations are pretty wild. And so far, things have been living up to those expectations. Again, every earnings season matters a lot from this perspective. As we lead into earnings season as well, we have to look at what's retail sentiment. Is retail sentiment really bullish? Therefore, it could be a buy the rumor, sell the fact. Or is it more likely than not that we've got to sell the rumor, that is, sell into earnings season and buy the fact? Well, I would argue that if you went and did this same sentiment survey that was done last Tuesday and you did it over the last 24 hours, you would probably find there are more bears, less bulls, and maybe similar levels of neutrality. And what's that mean? Well, it means the bull-bear spread between sentiment has really started to rock bottom. Traditionally, when we've seen these levels, we're kind of also seeing smart money index flows at around the levels that they've been at right now, which is very low levels. Basically, smart money has not been purchasing up. And we look now towards dark pool transactions and a V, that is that the market starts to actually show momentum in terms of the bullish structure. As we mentioned before, January will be the key for a lot of us. We're looking for the quad in terms of the main 4 reads that we use on this channel to figure out whether we think the year is going to be generally bullish or not. This is contrary to everything else that you usually read and see in the press. It's very important to look at how the market's actually building structure for the start of the year. And of course, we've lost the Santa Claus rally so far. We've gained the first 5 days here, as you can see by Grant Hawkridge's chart. And in general, we're looking now for, will we get a positive January and what's going on January 15th. We'll update you over the next 48 hours here to get that data through, because if we start to see a little bit better, then it could help us to determine that 2025 may be at least good until October. Now, as you can see here, FundStrat's data shows us that when we have that first 5 days positive and we didn't get over 1, we were just over 0 in this case. Generally, we will still be slightly bullish on January itself. And usually at least the first half and maybe even the financial year is 82%. Now, that's not too bad. It's not as good as it could have been. We, of course, would have rathered to get that 1% plus on the 5 days, but it wasn't to be. What does show us, though, that markets are still kind of bullish, guys, is we're just not seeing defensives. Look at this one, Staples versus SPY. We did this on our live stream that we did before the market opened. And as we mentioned, the reason why we're still optimistic on markets is we're just not seeing that defensive purchasing that we usually would. Usually what would happen is we would see extreme defensive positions. Everybody would start to rally into this. And that's actually what's happened before things such as the .com crash and the global financial crisis. It hasn't happened yet into 2025. And it has us cautiously optimistic about markets still. Let's go through what happened though in crypto. Was this enough to really put a base in? Well, as we suspected, people were going to get liquidated. And I think the level at around 3,000 on ETH was incredibly likely to be broken. And boy, oh boy, did it get broken. Now, there is some good news and some bad news. Let's firstly look at the bad news. And that was that people got absolutely wrecked. Yeah, we saw $790 million of liquidations. And of course, tons of people got liquidated onto the long position. The biggest ones were in Ethereum, and you can see here 257,000 plus traders were totally liquidated out. Now, this is why you've got to be very careful in crypto, but just remember, this is still within the parameters of a normal pullback within still a bull market. You might say that's impossible. Anyone that's been here since 2017 and been in the markets would know that, yeah, most crypto bull runs come with like 30% busts that look very plausible several times over. Have we seen flows go back in? Not yet. We'll update over the next 24 hours to see whether these are actually showing flows across the board. But we do have a dark pool transaction, and we also know that the big funds, that is these big whales out there, have been purchasing in. Take a look here, a little sneaky purchase by some Ethereum traders coming through over the last kind of 24 hours. And obviously we want to be paying attention to what they're doing, not what they're saying. In this case, whales seem to be purchasing in. And as you'll see in a moment, dark pools may have done so as well in the ETFs, in the exchange traded funds. Let's have a look now at the dark pools. Okay, this is the first one. We took this as of Friday's close, and we saw a sweep, and we saw a couple of large transactions come through right at the close. Now, Wall Street always tends to buy near the end or sell near the end. So in this case, we saw, of course, a gap down, fill on the S&P, and a bit of a rally back up. That could be a good sign that someone has bought the dip. We also saw near the absolute high, so that's the absolute low on the Qs, that basically we've got here now S&P 500 and Q bear funds getting wipeout. So that basically means that people that entered into the shorts, maybe over here or over here, have possibly exited their positions. A large transaction coming in at those highs. We also saw financials getting a whole bunch of sweeps around this level, something to look at. Of course, we'll be looking for the V on financials, so we'll check that out later in today's video. And the all-important Nvidia, one of the strongest, of course, stocks, one of the stocks that we need to see bullish action on, defended, guys. 2 large transactions coming through right where we saw them last time, and that is a good sign. Again, with the bullish action that then came off that low, that's the type of thing we wanted to see here. This is on the 2 times leveraged Nvidia positions. So it looks like Wall Street might be playing sneaky with us and starting to buy in. Mid caps also saw some defense. We can use this code if you wish to put IMCB on your charts. I would suggest you look at the price action. Markets move above here. Probably a good chance that we've just seen the V. Still some great profit to be had, and we may be moving towards new all-time highs. So IMCB, large transaction, second largest on record, not like the first one. I mean, the first one was absolutely bonkers when we got that back in August. But of course, at this point, we're still defending something that we saw just before, and we'll say this, just before the election itself. So of course, some large transactions have been going through there. Now, as we mentioned, we did see a large Bitcoin transaction. The last two big ones have led into sells. Is this one a buy? What do you guys think? Let us know. Is that a buy? Could be. Of course, price action does start to look good when you've got these big wicks coming off the bottom. And not to be underdone here, we've also got some big moves in gold, large transaction here in gold shares, and also the silver one, while it did drop a little bit, we'll be looking for, of course, SLV to go back above that 27 kind of 80 level. If that happens, good news for silver and gold bulls. We still are very bullish on gold and silver, by the way, into the first 6 months. Now, whether it goes now, it goes in February or March, these 3 months will matter. And we've already seen a pullback in time in all of those particular metals. So still really bullish on gold in particular and silver for this year. Now let's move over to the last 24 hours in terms of sectors. Everything kind of started the pre-market kind of bad. It then rallied a little bit back up. And we saw some kind of beat down sectors previously, metals, agriculture, etc., doing the best in the session. And of course, energy, which we've been tracking recently, doing quite nicely. Home builders was up, regional banks were up, and semiconductors, while they still were down 1% on the session, they did regain a little bit and stay firm. And this brings us to the last 5 days. If we look at the 5 days, energy, materials, obviously the inflation-based trades up here in the highs. So they're the inflation-based trades. And then we see here that really it's those kind of risk-off trades that are down here. Semis holding in the middle, and not really what I would say is a super defensive style market. Usually you'd have healthcare, staples, and utilities up near the highs. That wasn't the case in this one. So what are the signs from the technical levels? What are we looking for here, guys? First up, we've got a gap, and we filled it. Well done. That's not bad. Gap fill, of course, that means that we've wiped off everything that was gained from the US election and the so-called Trump pump, and we're back at this level just before inauguration. So is that bearish or bullish? Well, you could say, well, it's still holding above that 5,700, 56, which we know is the line in the sand when everything starts to really get nasty in the markets. Now, if you actually take the measurement from the high to the low of this level, that marks out, if it does get down there, about 8%. That's pretty normal. An 8 to 10% fall off on markets is not necessarily, scary or anything. When you start getting past that 10 into the 15, that's when you start to got to worry quite a lot. And obviously for investors, it's very important that levels like this hold up. If they start getting taken out, you've really got to question, is there a serious sickness in these markets right now? So did we see a buy off the gap fill? We certainly did. On the futures market, you can see here it has picked up a little bit, and it really comes back to options. Where are the big options for the expiration? Some of the levels to look out for this week continue to be 59.30, which is going to be kind of that bullish V. We've got, of course, 6K, which will break the downward trend line and break that previous high. And if that happens, we're probably looking at a new all-time high. So that's going to be very bullish. From the bears' perspective, they're looking at shorting it around this 5,900 level. And 5,900 probably is the key for this week when we look at options. Remember, this week is OPEX. It is the big options expiration. And why did the market manage to get back above 5,800? Well, a lot of it has to do with these puts. Take a look at this. 5,800 puts, huge strike there, same as the last 24 hours. Same as the next day, coming into CPI, the 15th, 5,800, still a huge put level. And when we go down here and we look at the 17th, that is the Friday, you may notice 5,900. So this market is in negative gamma. We definitely see the bears in more control than the bulls. We've seen a couple of large transactions come through, which suggests that maybe someone has started to move around and buy, but we're not out of the problems yet. Remember, really, you haven't seen structural change until around 59.30. If we go back and we look at the S&P, and we'll look at the NASDAQ later on in today's video to really make a point there, we're looking for that bid. We've seen some good action, particularly out of crypto, but we don't know yet that it's absolutely, a bull kind of level. We don't know that bulls are absolutely there unless you're using maybe a 3-6 month window. If you're trying to day trade this, remember, it's always about patience, reaction, not prediction. Buy in the dip, seems good when you get it absolutely right, but it can be diabolical. Tesla, not too much to report here. 400 is kind of around, 405 is around the call wall. As you can see, last 24 hours, we get into about 400. So right around that kind of level here. When we go to Nvidia, we know that we've got a 125 put wall. So you can see the 125 put wall. So that's probably the bottom end. 130 hit. And as we mentioned in the video, we do not want Nvidia underneath 127, 125 at any point. We do not want to close under there. It really needs to hold this 130, 125 area. Has to find buyers here for it to remain in a bullish trend. So where are we going for positive gamma? We're looking for 140 this week, 130, 125, probably the base. So unlikely to get underneath those levels. And therefore, if you did buy this one over the last 24 hours, you're probably looking much better on the options. Let's now move over to the charts. What about the lead indicators? First up, the American consumer. We track that often by looking at consumer discretionary versus staples. Does that look bearish to you? It doesn't to me. If we have a look at the US 10Y, of course, we've talked about this quite a few times over our previous videos. We talked about when we break out like this, obviously a breakout from here would be the real fear of the unknown. We're really looking for something to be done. That is, are we going to see something from the Federal Reserve to happen? Or if this is allowed to kind of get out of control, markets will continue to sell off. Now, why this is important is if we put in the US 30Y, what you'll notice is we have the same effect, getting closer to these highs. At around this 5% level, this is kind of where markets are freaking out. Now, in previous times, we've seen overbought metrics in each one of these. And when we get those overbought metrics, traditionally, we've seen sell-off. So that means that basically we've seen the high being put in at around this point for yields. Now, that would be very, very good if you're a S&P 500 bull and you're a dollar bow. If you're a dollar bow, then you're looking for this market to, of course, go back down. And if we look at the US dollar here for a moment, you'll notice that it's still tracking towards that 110.76. So this is probably something that still has to be on your points. A little bit of rejection over the last 24 hours. Certainly no structural change towards the downside. But for people that are starting to go, you know what, I want to be bearish on the dollar. Where's the best entry point for that? It's probably not exactly the best entry, but I guess you could make a case being a contrarian now that around this area is starting to look a little bit more interesting. Why is that? Well, a lot of it has to be with oil as well. As you can see here, oil almost hit right into our second target, and this has been very bullish over recent days. And of course, this is often correlated with inflation. So basically speaking, US oil starting to get pretty carried away just before the Trump inauguration. I find it very interesting how it's all happening here, and it could be just like switched like that, maybe with a tweet or an announcement or something else. Let's have a look at bonds markets. Are they freaking out? Bond yield spreads not freaking out. Bonds in general against the overall change in yields. I wouldn't say this is absolutely freaking out. Still kind of remaining at a series of higher highs and higher lows. Junk bonds still staying relatively strong. And of course, the other question that people are having is it time to see Treasuries bottom out? We do not know that yet. We haven't seen enough large transactions come through. So if we get the large transactions, which we track here on the channel on Treasuries, and at the same time, guess what, guys? We're seeing yields starting to drop on the US 10 and 30Y after being potentially overbought or some kind of intervention. This could be an exceptionally good trade. And I often don't say that because you guys know I hate trading Treasuries. I think they're a better longer term hold, get the yield, and obviously look towards maybe a future recession or something. But in this case, we're still looking at an 88 plus. We have not got the dark pools to come with it yet. When we get them, we'll announce it. And at this stage, we're tracking. Let's now move over to gold. Sold off a little bit, but still in a nice upward trend. We've obviously seen some large transactions come through for it. And silver is pretty close to where you'd want to see a buy recommence. So silver got hit a little bit over the last 24 hours, and it's come back down to a pretty heavily traded zone. Needs to find a bid. And as always, for a swing or an investor, you're looking for 31.15. We've been pretty consistent on that zone. US oil, I would say it's probably topping at this stage, contrary to the news. Of course, this entire trade here was completely against the news. We saw the movement up here. Everybody said that it's drill, baby, drill. The whole thing's going to explode. And then now everybody suddenly wants a piece of energy. Yeah, it's funny how that happens. But either way, we're pretty close to what you would think is probably a key resistance, at least from the technical charts. I don't know if I'd be buying oil at this level. Let's move over to Tesla, holding that firm level of 380. So that's good sign. Still in what we would call a pullback in time, sideways action. We believe this could hold for 1 to 3 months. So not as interesting on Tesla as it has been. We were super bullish after the election. And of course, we didn't like it as it approached 500. So still kind of just chilling on that one. If you like buying it, 380, obviously that 330, 340 would be more interesting, I think, as an investor. Semiconductors, what's going on here? Held that most traded zone. Found a little bit of buyers. Very important. This is an incredibly important chart. Watch semis, watch Nvidia. Nvidia dumped into 130, found a buyer by the end of the day. Obviously, we got that Marubozu candle recently, which, signals a pullback. So far, it's been a pullback. The question is now, are we going to see them defend this very heavy trade zone? We know 2 large transactions came through. We need them to instigate the buy. Are they going to do it? I would say I would like my odds more in the bull case than the bear case on Nvidia. And I know you may disagree, but we'll see. What about AMD? AMD still no break up. Interesting potential island reversal down here. That would mean gap up. We're starting to see bulls come back in. Certainly one for day traders to watch. If we do gap up on AMD big time, you can put stops underneath here and maybe it's a decent risk reward. Obviously make your own risk assessment on that. What about Chinese markets? Completely oversold. So nice bid here on China. Again, I think it's going to go against the news. It's like a sell the rumor, buy the fact, in my opinion. Could go actually bullish into Trump inauguration. And it seems to be selling off all sorts of reasons. Obviously, dollar index, CN10Y, all sorts of problems here. But it is oversold on a lot of metrics. So obviously looking for that to now find some bulls coming through. US 2K, middle of nowhere, but did find that 50 exponential. And I think the more important one's probably the NASDAQ. The NASDAQ came down to 20,000, didn't quite hit 20,400, which I would have said is the major buy. So around here, 20,400. But it did see a bullish hammer. So this is something that I think is kind of cool to look at. Obviously, we look at the structure and we say, well, have we seen enough? Not really. We've just kind of gone with some larger trades coming through, but we don't have a structural change. Going to keep the alert up here. Obviously, the downward trend line break of that's going to be super bullish for the market. So that's where you're going to be more sure that markets are really turning bullish. And at this point, it's early days. Yeah, we get a bullish hammer, but not probably enough there. If you look at the overall crypto market, though, some positive signs. Solana, take a look at this, wipes the low. Here, a ton of liquidations down here. Really would like a 194 plus on this. That would be pretty strong. Obviously, I'm going to leave the 200 strike as being the really bullish sign, but I think that's looking okay. Big wick coming off the lows. We know large transactions came through. Same thing with Ethereum. Wipes that 3,000 low, goes lower, absolutely cripples a few people. Unfortunately, I hope that's not you guys. But yeah, this is that third support zone, and crypto just loves doing this. It's now dropped off, and let's just take the percentage so you guys get a bit of an idea. It's dropped off 28.83%. You might say that is diabolical. Yeah, pretty normal in these types of situations. So it shouldn't drop any more. To get more than 30% off, that's not good, okay? So this is usually where you have to see the turn point. So we're looking for the turn point at this stage, and we're still kind of looking at that 3,400 plus to really prove that this was an absolute steal from Wall Street, from the whales, against us, the retail traders. Same thing on Bitcoin, really strong buying here off that 90K level, really nice bullish action. Bitcoin often leads out, so let's have a look here at the structure. Not bad, but still not enough, 96 plus. 96 plus, good times. So obviously, I think this is where day traders will be very excited about the markets. I'm sure some people already bought the dip here. I don't blame them actually, down at those levels we mentioned in our live stream. And something like that would be fantastic. So if we saw that on Bitcoin, yeah, I would be pretty bullish on it, along with those dark pools that we started to see. So with the news coming this week, remember it's earnings season. And then on top of that, we also have the CPI numbers. CPI numbers release 1 hour before the markets. We do also have here on Tuesday PPI, which will be annoying. So we've got a lot of news. This is a huge news announcement kind of thing. Expect bold to come through. Obviously, the VIX did spike up. And as always, guys, stay calm in these markets. One of the things that I mentioned on the Monday stream, and I think it's really important for 2025, is no emotion, okay? When it comes to trading and investing, whenever I've made emotional decisions on anything, they tend to be poor decisions. And I'm sure you feel the same way. No emotion is the storyline of 2025. This is not as easy as 2024. Make sure to subscribe down below if you're interested. Hit that bell icon because we do these daily. And guys, this is going to be the year, or maybe next year, these next 2 years are probably going to make and break a lot of traders and investors. So stay informed, but don't pay attention to some of the narratives. It's going to be watch what they do, not what they say. Thanks so much. You have a fantastic day. See you in the next one. Bye for now, guys.